Hey everyone, it's Evan here from the Trade Risk on Friday, March 2nd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we had sellers taking back control of this market this week. The S&P 500 fell 2.04% and bearishly engulfed last week's range. We had small caps outperforming. That's not something we've said in quite a while. It just hasn't happened. They still closed red on the day. That is the Russell 2000. I'm sorry, red on the week, the Russell 2000. And but it did see a nice bounce off of those lows and did outperform relative to the other major averages. And we also had the US dollar ended up failing to hold its rally. We don't talk about the USD too much in rotation in these videos, but we tried to get a rally going throughout the week. We failed to hold those highs and closed back around flat for the dollar. So there's quite a good amount of movement all around this week. So there's plenty to talk about. Stick around for this week's weekend market recap video. All right, let's kick things off here with the S&P 500, the SPY ETF. You can see this is a weekly time frame now, so each bar represents 1 week of trading, and we did close down 2.05% on the week, 5.6 SPY points to the downside. Now, first things first, we did get a bearish engulfing bar here on the weekly time frame. So that basically means that we opened above last week's highs and we closed below last week's lows, otherwise known as a bearish engulfing bar, because we encapsulated all of last week's trading and then some. And in this case, it was a bearish sort of encapsulation, and sellers basically took control, took out last week's lows, just barely so. We did get a good bounce going, and we had a chance on Friday to fractionally get back above last week's lows, but couldn't quite do it. Closed around 269 or so. Last week's lows were right around 269.64. So when we take a look at the action here again, we are now below a 8-period exponential moving average here on the weekly time frame, which is slightly downward sloping at this point, but we are still above a flattening 20-period EMA. So we're kind of sandwiched in between here, and it gives us a little bit of an indecision point. And when we look at these pink lines on our chart, these are the near-term sort of extremes that we could look at. It's fairly wide at this point. It's about 30 SPY points, but all the way up at 286.43 where was the all-time highs made back in late January. And we have the lows here made from early February right around 252. And just if we zoom out here, you can see we're basically just smack right in the middle of this range here, with some volatility expansion that we saw this week, with a little bit of a bearish sort of characteristic on this engulfing bar, slight uptick in volume. We're seeing MACD come back down. So it tells us that we sort of have some mixed signals here. All in all, though, that the trend is still holding up, right? If we were to draw the trend that extends from, say, the 2016 lows here, we are still holding above it. We're still holding above the lows from earlier in February. So it basically suggests that there's some near-term indecision here. Maybe expect some volatility, some chop is here to stay for the next several weeks or so. And we're going to want to pay attention to next week's trading because of this bearish engulfing bar now that generally suggests that sellers are in control in the near term. And we want to see if they do get follow through to this sell bar, to the selling that we saw this week, next week. And if we do, we start to think about some of these old lows that we just recently, or I guess at the beginning of February, made to start to retest. And we'll talk about that now as we go down to the daily chart. So this was a bit of a sneaky start to the week here on Monday, and we're going to just dial this back. And we covered some of this. If you watched our Tuesday recap, then we did go over some of the thought process here. But in case you missed the video, Tuesdays and Fridays, then I'll recap sort of some of the thoughts here and take it to current trading. But basically, if you look here at the rightmost bar of your screen here, we're looking back at a daily chart of the S&P 500, and this was Monday's session. This was Monday's open for the start of this week, and you can see it was a very bullish start. We got confirmation to the upside, we got follow through to the upside from Friday's strong close, we got a gap higher and basically a gap and go and closed strongly on Monday to kick off the week. It's everything that you'd want to see as far as the bulls are concerned, but Tuesday's action was not what you wanted to see. It was a bearish engulfing bar, and basically our thought process here and what we outlined on Tuesday's midweek video was it's something that needs confirmation. Just like we wanted to see confirmation here on Friday to the upside, we want to see if sellers get confirmation with a follow-through day of selling lower, because we know we are still above an 8 and 20 period rising moving average, which is slightly rising but still rising, and we are above the range that we just carved out for about 4 or 5 trading days, and we want to respect that and give the bulls sort of the benefit of the doubt until or if we see that follow through selling. In fact, we did get the follow through selling. We got no real attempt. We had an open gap higher slightly, but that failed pretty quickly, and then we saw selling accelerate to the downside, and we closed at the lows. This day on Tuesday, I think is if you're an active trader, if you're looking at time frames similar to this, the next couple of days of trading, the next week of trading or so, this is a day to pay attention to take notice, to potentially reduce risk and get off margin, or whatever you need to do depending on your strategy. We had that long S&P 500, that SPY position on that we talked about. We were long here on Friday, long on Monday, long still on Tuesday. Wednesday was the day we got out of it. We took the small loss again in the S&P 500 because of this follow-through day as it came back into this old range here. In the most bullish scenarios, in the most bullish environments, we would expect that support is respected and a higher low would get put in here above some of this range, or retesting this range, or at least if intraday we sold off but we saw a bounce into the close. Those are all situations where we would have stayed with that trade if the bullish scenario was still unfolding. This told us that something was changing here, is to respect the bearish engulfing bar that happened on Tuesday. And basically the way this week unfolded is more selling on Thursday, more initial selling on Friday, but that did end up drying up, and we did see the reversal here into the close where we ended up closing green for the day of Friday. So as it stands, when we look at this market and we think about some of the levels and what's happened here, I'm gonna outlay, as we always try and do, is keep an open mind. It's not about predicting exactly what's going to happen, but to be aware of all possible scenarios and start to align ourselves in some of those high probability scenarios that could unfold. I'm going to start with the bear case here, and the bear case is going to go something like this. This bearish engulfing bar, the highs that we made here to start off the week, is going to be, again, this is just the bear case I'm outlining first, that this is potentially going to be a lower high here in this broader sort of context, this larger structure, if you will. So basically, you would have had a swing high here. This was the all-time highs from back in January. You have your first lower high right here, and then you have your swing low right here, and then you have your first potential swing low right here. So that would give us our first potential swing low. It's not confirmed at this point, right? Because we could see a V-shaped rally from exactly where we are, take out these highs, and then all of a sudden we don't have a swing low. But this is what the bear thesis is going to be, is that this is potentially a swing low, which gets us back down to these lows and, of course, start to trend in the other direction. That's, sort of the bear thesis, along with we are now below an 8 and 20 period bearishly aligned moving average. So just like we were optimistic up here that we were above a rising 8 and 20 moving average, we're now below a declining 8 and 20 moving average, and we are now below this same structure that we wanted to see respected on the upside. We are now below the supply in here. So everybody that traded in this 4 or 5 day chops, and everybody that bought this breakout that still perhaps hasn't sold yet, is now underwater here, and you have all of this supply from the past week or so, which is the most immediate supply, which is now in a losing position here for the S&P 500 on balance. So if we were to see a constructive bullish narrative start to unfold here, we would essentially want to get back above these moving averages, which are declining, and we'd want to break back above this structure here, this zone. Some people are going to call it 270, some people 272, 273, whatever it is, however you want to draw your lines or look exactly at this price structure. I think the idea is we want to get back above here, as quick as possible. If you are a bull on this market, or if you are looking for rising prices, you want to see this market get back above there as quickly as possible. Now, the other side of, to make a sort of a bull case on this, which is a harder thing to do because, of course, we did violate some support here. But if I were to try to make a bull case here, I could speak to the fact that we did get a violation of this support. We did see the VIX start to climb this week. We did get a little bit of panic, a little bit of fear. We got those week longs or tactical longs, even like myself over here, to drop out of some positions to reduce that exposure. And maybe this is a good enough shakeout to put in a sort of broad sense higher low that could start right in here, right? So if you take this as a low and then this potentially becoming a higher low, then maybe this is a V-shaped rally that does suddenly launch us back above here, and we start to go back on the path now of coming back to those all-time highs. That is the eyes open or mind open bullish scenario that could unfold here. It's a little bit harder to make that case given the fact that we are, again, below, and we did violate some support here. And the S&P 500 is a tougher example. If I wanted to go to the Qs here, that thesis suddenly looks a little bit better, because when you start to look at the Qs, you could make that good case to say, you know what, actually support has held here. We sold off for 3 days. Maybe that's fairly standard. Came back down, retested support. We sort of overshot it just a little bit. But look at, we reversed, we closed higher, and we held above this range that we carved out here. This is our new upper level support. And this is a bullish development that we came back down, tested support, it held, and we reversed. So there are, so it depends on what index you want to look at, and it depends on sort of what evidence you want to give weight to and what your sort of narrative, what your strategy is at this point, because I could make sort of a case for both sort of sides of the aisle here. Again, I would say with the Qs, you want to see confirmation, you want to get off of this support, and you want to see a rally up here. And again, when you take this in perspective, we're about 4 points off of all-time highs. That's, call it 2% or so. Very, very quick to be making all-time highs again here in the Qs. It can happen, by Monday, Tuesday of next week if we really saw that excitement, if we did see a sufficient washout here on this late week selling. So when we go back to the SPY chart, I think, again, as time frame is always very important, your strategy is very important. You want to be, in my opinion, respecting the selling we saw here. We did break some technical levels, that's for sure. I don't think this is a high probability spot. I think you could tactically, based on this reversal, based on all the reversals we saw across the market here on Friday, into red territory by 1% and then closing back into positive territory above yesterday's lows. That's constructive. Maybe we get a bounce back up into this range here. Something that, if you're very tactical, I could see the merits of potentially getting some long exposure for a 1 or 2 day bounce. But I think you got to measure that bounce very carefully as we start to get back up to, say, SPY 274 to see if we have enough oomph to sort of break through there. And you want to, of course, be very active in your management if you're going to be doing that. Otherwise, keep an eye on this basic level here. And again, I think there's times to play defense, there's times to play offense. I think you can be tactical right now if that's your style, but to say that you're going to be loading the boat here for a move back to all-time highs, I don't quite see it. To be extremely bearish, saying we're definitely coming back here, I don't necessarily say I see that either, even though I would probably say from a structural basis, sellers got a little bit of the upper hand right now based on what we saw unfold this week. So lots to think about there. Let's look at the IWM, because I think this is an important one as well. The IWM saw actually a good size rally back on Friday here, and it was the best performing index here on a relative basis, down 1%. Take a look at the tail here. We're still, below that 8-period EMA, which is very flat on the weekly, above the 20-period. But if we take a look here at the daily chart, we did hold or ended up holding by the close of the week anyhow, above this 150 level, which is a pretty critical level. Look how much supply was right below that 150 back in late 2017, how much supply was slightly above it, finding support in December of 2017, and we are back above it now, trying to close above the 20-period EMA, which is very flat here on the daily chart. So some constructive developments here on the IWM. into the end of the week. And I got to say, when I was looking at stocks and, looking through my scans and screeners and what's actually holding up, I saw a lot of small cap names that were pretty damn resilient throughout this week's sell-off, and particularly even biotech, lots of different names in there. So that is a interesting sort of tell there that maybe the canary here that's going to lead us with some clues is the Russell 2000. And if that gets followed through next week, that may bode well for the rest of the market. And we sort of already talked about the NASDAQ 100, best in class still on a structural basis. It held support here. That's constructive to see. It's only about 2% off of the highs. It's above the 20 period. You want to see this follow through. If we start to lose 162, if you start to get back below these levels, all bets are off here, and you'd want to be a little more cautious defensive posture, as the Qs would be back below the support right around 164 or so. So that's the market environment overall. Let's start to get into some other things here. You can see TLT acted as a bit of a safe haven on some of the sell-off. We did close flat basically on the week, up 22 cents in the TLT. You can see, it's been crushed throughout January or so, and it's trying to stabilize around these lows, which do coincide with early January lows. So as one might expect here, this is a point at which the market is respecting. We'll have to see which way this sideways range ends up resolving itself. For now, it's still to be determined, but something to pay attention to. Had a poor close on Friday, but all things, again, mostly moving sideways over the past several weeks. Go to GLD next. GLD did have a down week here, down 60 basis points, but a good tail holding above the 20-period EMA and holding above this upper range that it's been basically respecting for... see if I can get back to the daily chart. There it is. Basically respecting for all of 2018. So we had this sell-off, this sell-off that started on Tuesday with this 1% down. We kind of resolved this mini 3-day range to the downside, and then we had this inside session, and we had a pretty ugly session going for Thursday here, but that selling ended up sort of drying up. We did see buyers step in here at this prior significant level. This is a position that we put on here, long GLD on Thursday, on this reversal here, on this sort of, hold of the bottom end of this range here. So we do have a long position in GLD right now. We're looking for the lows of this year right around this 124 to hold. Stop loss, of course, is in place, but we are long this right now, looking for a move back to, say, at least the midpoint of this range, maybe scale some off there, and then hopefully get to the top end of this range, and even better would be a breakout. But for now, we're seeing if this can hold in here, like the high volume sort of reversal at this critical spot. It's held twice before. Why not 3 times? Let's see if this can hold up and make some progress into next week. Had a little bit of follow through here on Friday. Moving averages there, not ideally positioned at this point, so we do want to see those flip. But for now, long GLD, and we'll see if that gets us some movement going into next week. Silver here, we closed out our trade in silver. We were short silver for a little over a week. Basically initiated the trade right here on this breakdown day on Tuesday. Basically sat through a lot of chop, and on again, Thursday was the decision day here. We ended up selling half of the position on this gap down here into our first target, right around 15.30 or so. So we took half of that trade off, and then given how it closed here on the day, we basically closed out the rest as it did, move from 1.5% down to, over or close to 1% higher, or 0.5% higher here on Thursday. So we did exit the rest of the position up here towards the close. So all in all, a small win here for silver, but similar to gold, looks like maybe a little bit of a bottom is potentially being put in here in the metals in general. We'll have to see if that holds, but we no longer have a position here. Took the small gain, and that's it. I'd like to see silver start to rally back above 1570 or so, get some follow through above some of these moving averages, and then all of a sudden, the bull side of that looks a little more appealing to take for a potential trade. So those are the metals. If we go to USO next, we'll look at oil. You can see oil here. We talked about potentially here on Tuesday in our midweek video about being a sort of early or sort of an aggressive short entry here as we kind of took out the prior day's lows. that trade would have worked out. We got a nice follow through a selling day on Wednesday, but then we saw some late week sort of stabilization here. So it's kind of in no man's land. It's in this consolidation pattern now. Sold off down to 1175, made a move back up to 1295. So maybe a little bit of a triangle kind of forming here, tightening up, coiling pattern. Not too interested one way or the other right now, but something to pay attention maybe next week. Sets back up for us towards the end of the week. And natural gas, again, still not doing anything interesting, just moving sideways here. Very, very quiet. A little bit of volume coming in here towards the end of the week, but you can see starting to grind itself off of these lows just a little bit. Maybe that's enough structure if you're very tactical to start to test the waters on the long side, but does not look too interesting to me one way or the other there for UNG at this time. So those are the majors I wanted to cover. Let's talk about some of the sector analysis now. Got to speak to semiconductors. Just tremendous strength here in semiconductors. Take a look at this pattern here. Basically ended up making new intraday highs, all-time highs here in the SMH on Tuesday. That was a sort of turnaround day, which did start the selling, and we did get that pullback to a rising 20-period EMA. But take a look at the buyers here on Friday, basically reversing all of Thursday's, holding exactly where it needs to. It's about 1% or 2% away from all-time highs. Looks great here for semis. Just a good pocket of strength for this market. XLK goes essentially hand in hand with it, similar to the Qs, similar to semis. Technology here is working pretty well. Semiconductors, semiconductor, biotech. Biotech, I did sort of speak to those at the top of the video, seeing a lot of individual trade ideas or trade setups form in this space here. And look at XBI, which is, again, pretty resilient, strong snapback here on the end of the week, almost 3% to the upside, reclaiming some of those fast-moving averages. Still has more work to prove, above 93.30 or so, starts to break from this range that it was in for the past 2 weeks or so, starts to take out those highs. That would be a very constructive development for the market, something to pay attention to. So set your alerts or pay attention to this 93 and a quarter level. If we start to clear through there, that'd be a good sort of breath of fresh air for the market, for the upside, for the bulls. So something to pay attention. You could look at IBB, not as attractive. I mean, I like XBI, the structure a little bit better, but still, you can't be too upset with the bar here that we put in on Friday, bullish engulfing bar from Thursday's session. So biotech is in general pretty interesting. I think XLE has been a dog. Maybe this though is a sort of mini buy signal here on the bottom end of this range, a little bit of a reversal. We tried to break down in XLE, we failed. Kind of moved back towards the upper end of this range, right around $67, which has been a good spot. I think if you're looking for a tight risk spot, XLE probably makes a little sense here for a long position. Don't have any myself, but I could see the merit behind it. And on the downside, I think XLB materials, a little bit weak here, just on a relative basis. Take a look at, we're getting close. We're closer almost to the lows than we are towards, maybe that's not exactly true. It's pretty close, that we're almost closer to the lows here than we are the highs from Monday and Tuesday of this week. So XLB on a relative basis, just a little bit, we saw that sell volume pick up here, didn't even quite close positive on the day. So a little bit in the doghouse here for materials, and to a slightly lesser extent, industrials. Couldn't quite close green on the day. I mean, it did have a reversal, but take a look on a relative basis. It is getting close to these lows versus the highs that it made back in basically Monday earlier this week for industrials. So that's it. That's what I have for today's recap, or this week's recap video. A little bit of volatility. Hopefully you guys are navigating it okay. Thank you so much, as always, for watching. If you like the videos, do subscribe, and I will talk to you on Tuesday. So have a good weekend.